How to finance home improvements. There are many ways to get home improvement loans. Here are some of the most common. Personal loan. You can borrow money from a bank, credit union, or other lender and use it to finance your home improvement projects. The interest rate may be higher than for a home equity loan or line of credit, but your interest may be tax deductible. Home equity loan or line of credit. A home equity loan or line of credit lets you borrow against the equity in your home. The interest rate may be lower than for a personal loan, and the interest may be tax deductible. Home improvement loan. Some home improvement stores offer financing options for home improvement projects. The interest rate may be higher than for a personal loan or home equity loan, but the interest may be tax deductible. Credit cards. You can use a credit card to finance a home improvement project, but you should be aware that the interest rate may be high. In summary, the most common way is to go to a bank or credit union and apply for a loan. The bank will usually give you a loan based on the equity you have in your home. Another way to get a home improvement loan is to go to a home improvement store like Home Depot or Lowe's and apply for a loan there. The store will usually give you a loan based on the amount of money you plan to spend on your home improvement project. No matter which way you choose to finance your home improvement project, be sure to shop around for the best interest rate and terms.